What's up, YouTubers? How are you guys today? Today, I wanted to talk about insurance policies and why they are important. Life insurance policies, in particular, is what I wanted to talk about today. I know it's a lot of confusion about the types of insurance, life insurance policies there that's out there. So I just wanted to go ahead and cover those policies. So you have a whole life insurance policy. Now, whole life insurance policy does exactly what it says. It covers you for the whole life, for your whole life. It also has you pay a monthly premium, which is the monthly bill you pay to keep your life insurance, is called a premium. Now that premium does not change. It stays the same. It's pretty much guaranteed for your life. And with the whole life policy, you can also have an option to have additional riders, which can be like a long-term terminal illness, long-term disability, terminal illness, things of that nature. It can be more, it can be less. You can have a rider, you may not, depending on what type of policy you have. Also, with the life insurance policy, there is a cash value option. Now, the cash value is it accumulates money that you can borrow whenever you're needing to borrow that money. Now, if you receive a whole life policy, usually that policy will need to take about 3, 4, maybe 5 years, depending on what type of plan you have, before that cash value accrues money that you could borrow from. Now, when you borrow from your cash value, your whole life, when you borrow from the whole life policy, that cash value is intended to be paid back. Now, a lot of times people don't pay back the cash value, and then it gets deducted from the overall death benefit, which is the amount of your policy. Like usually most people have a policy for $50,000, $150,000, $250,000, $1 million. That's how much that their family or loved one will get when they passed away. That's called a death benefit. So you have your premium, which is the amount you pay to keep the policy each month. You have the cash value, which is an amount of money that accumulates the more you pay on the policy. And with that cash value, I didn't mention, but you don't have to be approved for it. Like a loan, you don't even have to get approved. If your policy has a cash value, once that cash value reaches a certain amount, you could definitely borrow from it. Again, if you don't pay that money back, it will be deducted from that death benefit. The death benefit is the amount of the policy that you purchase. And again, that amount is what you want your family members to receive when that time comes and you pass away. Right? There's another type of policy that's called a term life insurance policy. Now, you probably are very familiar with a term life insurance policy because most jobs have term insurance policies. They don't last long. When you're at a job, the job gets a group discount, so that way you pay a low price for this policy. Usually it's about $50,000 that you'll have, but if you leave that job, you usually lose out on the benefits of that policy. Now, some jobs, and you have to be real careful because some jobs, they are the beneficiary. Now, the beneficiary is the person who receives the death benefit, the money that you're paying on for this policy. So you want to be careful that you understand how your life insurance policy works. If you have a life insurance policy with your job and you haven't added any people on that policy to receive those funds, if something was to happen to you, you need to review your policy and possibly get another policy, because some jobs are the beneficiary for for that employee. So you definitely want to check. It doesn't happen a lot, but some jobs that is the case. Okay. There is also, another thing with the term policy, usually people get it for 10, 15, 20, 25, 30 years. And once that term is up, then you have to purchase a whole new policy. So then you may have to be graded or be take an exam, a physical exam, to find out what your health is like in order to receive that policy. It all depends on what type of plan you do receive, because there's so many different types of insurance plans that's available. Now, if you need insurance and you can't afford a whole life policy, I would suggest a term policy. Now, there is another type of term policy, which is called a guaranteed issue policy. Now, with the guaranteed issue, usually it goes for for your whole life. The only reason I consider it a term is because usually most people who have to get a guaranteed issue policy, they're not in great health at all. And so usually they're not even going to be around that long a lot of times. But your age and your health are big factors in you receiving an insurance policy and how much you would pay for that insurance policy. So the younger you are, the less you would pay for your insurance. The healthier you are, the less you would pay for your insurance. So that's another thing. But with the guaranteed life insurance policy, that's the type of policy, again, if you have health issues, you're guaranteed to receive that policy until you pass away. That policy also will the premium will stay the same throughout your life, but those are usually on the lower end. Usually they only cover the cost of a funeral, maybe $10,000, $20,000, $25,000. Sometimes you can get one for 30. I'm not quite sure if you can receive one for 50. If you can, that's excellent. But a lot of times they don't go up that high. And one of the last insurance policies that I wanted to cover is the IUL. IUL is the Index Universal Life Policy. Now, with that type of policy, usually your premium fluctuates because this type of policy is an investment policy. So this can increase your money that you're putting into that policy each and every year. It can increase your funds. It's almost like a stock, if you would say. It accumulates money and it gains money for you for your, let's say, retirement. So a lot of times you will hear about someone getting a IUL policy for their child or for themselves before they retire. And once they retire, that money will accumulate and they have way more than what a 401k can provide for them. Now, that's a great policy if you have steady income coming in and you're able to have fluctuating payments. Now, your payments can be more some years, they can be less some years, but an IUL policy is definitely a great policy to have because it's an investment. You can increase your finances way more than you would if you had money saving in a bank account. So, if you have any questions about those type of policies, just DM me or message me. Let me know that you have some questions. I can assist you further. Again, my name is Katrina Stone. I'm with Stone Independent Insurance Agency. We're here to protect you in all ways possible and make sure you're covered and your family is protected. Again, thank you so much for watching this video. Please subscribe to my channel and give me a thumbs up and I'll be back with another video. Peace.